Warning: this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and I think today is going to be pretty short. I've got to take one of my cars to the garage. I've got to drag the wife out there so she can give me a lift back. So I'm a little pushed for time. I think realistically, not a great deal has changed. We've got the CPI data coming out today, and of course, we want to let the dust settle, see if we can find true direction by Thursday or Friday, and then by the end of the week, we'll come back and do the deep dive and see what's in control, right? The data or the markets. This whole solar cycles thing is starting to become like a meme, but also, you know, there seems to be more to this than at least I thought initially. So going to continue to update on any kind of solar stuff that is coming out. We've got a strong solar flare as of the 14th of May. Again, so I expect maybe this is something that's going to continue to be a thing. I don't know. Either way, like I said, we'll keep an eye on this and we'll come back when there's something to say about it. Of course, yesterday we had the PPI data come out and it came out hotter than expected, both hotter than I expected and hotter than the market expected as well. So the US PPI came in at 2.2%. That was in line with the forecast, okay? But month over month, we were above the forecast and the prior month. Core year over year was above the forecast, as you can see, and so was month over month. And so I'm seeing quite a few people come out and say, ha, told you so, Camel, sticky inflation. And maybe you're right, okay? But I have a few things to say about this. Number one, if you disagree, you can disagree. That's fine. I'm not trying to shill you my idea. I'm not trying to force my expectation or ideas on you. I just present my ideas because they are authentically my ideas. And as always, I'm open to being proven wrong. I currently am in the midst of being proven wrong. And as I often say, traders and investors get things wrong all the time. It's not about being right or wrong. It's not about bragging rights. It's not about trying to nail a prediction for clout. It really is just as simple as I have a framework within which I try to work, and we check in regularly to see if that is still holding up. And if it's not, then I'll just abandon the thesis and go to a new one, right? I show this thing over and over and over again here, and people are very quick of late to criticize this because I've been making the argument that anything that happens to the M2 rate of change shows up in the CPI with around an 18th to 19-month lag. And people at the moment are looking at the hard right edge of this and saying, well, yeah, I told you so, Camel. Inflation is sticky. You're not going to get this third and final leg down, right? I've been making the case that we've had a sideways wobble and down, and we were going to see down, a sideways wobble, and then a drop off in CPI. Like I said, a lot of people are quick to come out and say, I told you so here, but they're kind of looking too short-sighted in my humble opinion, right? All of this was covered in real time on the channel, right? We nailed the top in inflation. We said that we would come down, have a sideways wobble, and then begin a third and final leg down. And actually, we were right about this. We were right about the sideways wobble, and we were even right about the third and final leg down initially, and then they came out and changed the way they calculate the CPI. And since then, it's been a bit more wobbly and a bit more sticky. And so it's my personal belief that this is not really reflective. The CPI and PPI is probably not reflective of what is actually happening under the hood. And again, you can choose to disagree with that. You can choose to accuse me of being dogmatic or stuck on a narrative. But as always, I'm going to continue to give this thing a bit more space until I can say, okay, it's unreasonable to continue with this idea at the moment. As of yesterday, a lot of people were asking me, oh, is this bad that we've had hot PPI? Does this invalidate the melt up, blah, blah, blah. But the reality is, okay, we expected softer, or at least the market and I did, okay? But it doesn't matter. What matters is where the markets finish the week. As of right now, we are still looking for a cycle low for Bitcoin. That has not changed. I still want to see stocks not lose support, although some kind of shakeout was normal and to be expected through CPI. That is very common. When we get CPI, we get shakeouts and games played. So again, no changes to that. And I am still very curious to see if the 2-year yield believes the data. Like I said, I don't believe it, but does the 2-year yield, does the bond market? Well, you're going to see in just a minute, it doesn't. So the reality is, there's actually no changes, right? Whilst we've had a hotter than expected PPI print, again, it's not about me being right or wrong about inflation. It's about staying on the right side of the market. It's about seeing what the market thinks. If we have a look at the CME probabilities for the rate hikes, rate cuts, rate pause expectations, what's pretty interesting about this is even with the hotter PPI print, since yesterday, we have dropped from 96% to 91% that we're going to remain paused in June. Clicking out to July, you can see we went from 74% yesterday before the PPI to 68% today. Clicking out to September, we dropped from 38% to 32% that we would be remaining paused. And November says we dropped from 25% probability of being paused in November down to around 21%. So even in the face of quote unquote sticky inflation or a hot PPI print, okay, we're actually putting cuts back on the table. Admittedly, these are nominal changes for now, but this right here at least is a hint, in my humble opinion, that the CME doesn't believe the data, just like I don't believe the data. And even in the face of sticky inflation, okay, let's say I'm completely flat wrong about inflation and inflation's going to be sticky and start to tick up. Well, that doesn't mean rate cuts aren't coming, because unemployment continues to get worse and worse and worse. And that's likely why Powell had such a dovish tone in his voice when he spoke yesterday. At the hard right edge, okay, the temps leading lower. We're seeing the rounding, this is U6. And again, every other time we saw the temps lead lower and the top, the temps lead lower and the top, the temps lead lower and the top come in for unemployment, we entered a recession and tough times for the stock market and risk assets shortly thereafter. So even though most people are distracted by saying, oh, look, inflation's sticky, higher for longer with rates, blah, 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 you know, the market doesn't believe it. Like I showed you with the CME, they are starting to move more in the favor of seeing cuts. And this is largely because the unemployment situation just continues to get worse and worse and worse. And then keeping on with this theme of, does the market believe the data, right? What does the bond market think? It is still a case of tell that to the bond market. As I've shown over and over and over again, when the 2-year yield leads lower, we get the onset of a cutting cycle sooner than people are ready for. It was the same in every other case in history. And whilst everyone is looking at sticky inflation and saying higher for longer with rates, when we hop into the 2-year yield, what do you see? Right here, okay? Now it's got some work to do. It is not yet confirmed below that local low, but this looks an awful lot like breakdown, retest, and resumption lower to me, for now at least. Again, we should know by the end of the week or perhaps early next week, but we break below that low, okay? And again, nothing has really changed. This will be the 2-year yield leading lower. This will tell us that rate cuts are coming much sooner than people think. And again, it speaks to the bond market not believing in the inflation data, just like I don't believe in the inflation data. And again, this is not dogma. This is not being married to a narrative. This is just simply saying, I believe in the charts, I believe in the bond market more than I believe the Fed's official PPI print, which of course everyone knows they chop and change and pull things in and out of the baskets every week anyway. Of note as well, okay, this is the 10-year yield. What do you see at the hard right edge? Okay, does the bond market believe the inflation data? No, it doesn't. Okay, and who would I rather believe? Would I rather believe the PPI print or would I rather believe the bond market? Again, I say, inflation is sticky? No. Tell that to the bond market. And we're even seeing the DXY start to potentially soften. Okay, now all the while it's above the cycle low, then it's above the cycle low. All the while it's above the support, it's above the support. But what if this thing starts to break down soon? Then are we saying that the melt up's invalidated? The Bitcoin's not going to have a blow off top? No, I don't think so. And even if this thing bounces off of support and continues higher, I still think the signs are there to see continuation to the upside. Here's the S&P 500, right? Does that look like the melt up is invalidated yet? No, it certainly doesn't. Is some kind of pullback expected? Yeah, I think so, right? We don't usually just blast off in a straight line, but if it indeed is a blow off top, then maybe we are going to this time. Probably going to find some resistance at this prior all-time high, maybe a little shakeout, and then we can go, possibly have to move this over slightly, something like this. Same with the Dow Jones, okay? Nothing else to say about that. And the NASDAQ, that looks to be a breakout, doesn't it? That looks to be a confirmed breakout. Looks to be like the NASDAQ wants to move higher. So I am now looking for dips to buy. I kind of think that CPI is going to give us a shakeout, but if it doesn't, right, if it doesn't today and the market continues higher, then either I'll let this one go or we'll buy a half cycle low. Russell 2K as well, starting to look better and better, isn't it? Starting to push off. Happy days there. And remember what I was saying about tell that to the bond market? Well, tell oil that inflation is sticky. This looks like it is getting ready to roll over. This looks like Camel is getting ready to short this thing. And if oil continues to come off, okay, does CPI remain sticky? I don't think so personally. That's just my humble opinion. Gold, long and strong, continue to push. Silver, long and strong, continue to push. And of course, Bitcoin, okay? Bitcoin, we're still looking for a cycle low. We're in the window. Maybe we get a shakeout today, followed by a swing on Thursday or Friday. And if we get that, that would be nice. That would be easily identifiable. That would be a nice place to get long. That would be a nice place to add the crypto stocks in the member section. And so if I go all the way back here and finish where I started, yes, inflation came in hotter than I and the market expected, but it doesn't matter. What matters is where we finish the week. We are still looking for a cycle low, no change there for Bitcoin. We still do not want stocks to lose support, although a shakeout is of course expected during CPI. And we are still curious to see if the 2-year yield and oil believe the data, because so far they do not, again, tell that to the bond market. So there is really no change. Of course, today is CPI, so we're going to find out, right? Is it hot? If it's hot, does it matter? And I would argue it doesn't really matter. Hot or cold, to me, what matters is how the markets behave and how able I am to stay on the right side of the trade. So I think I managed to keep this one pretty short. Like I said, I've got to do some stuff today. I will be back tomorrow as always. And by the time we get to the end of the week and we've got some closes to examine, the weekend's deep dive should be phenomenal. So other than that, I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.